is ready, taking a look all around solar. And Jason Britton's with us, President and CIO at Reflection Asset Management, and Madeline Ruid, AVP Research Analyst at Global X ETFs. Thank you so much for being with us. Jason, within your notes, I was seeing what a great quarter we saw for solar. How so? How is demand going forward? What do we need to know here, Jason?
So according to the Solar Energy Industries Association, it was the second best quarter of all time, bested only by the previous quarter, Q4 of 2023. Lots and lots of tailwinds in the space. You're talking about the play that just came off of AI. We had the conversation, just your previous guest, as well as the growth in EVs. I think there's a lot more room to run in this particular industry.
What do you think will drive it, just quickly, Jason?
So I think what's going to drive it is the fact that there's still plenty of political will on the subsidy side, and 75% of all new generation capacity that was added to the grid was solar. I really think that we are in a renaissance of this. A little concern, though, however, is going to be having the grid keep up.
Mm-hmm. And Madeline, what are some of your thoughts pertaining to solar?
Yeah, definitely. So thanks for having me. We agree that, the solar industry is booming, not only in terms of the rapid growth in installations that we've seen recently, but also in terms of the massive amount of investments that we're seeing going into the manufacturing landscape as well. And this all points to a potentially bright future, despite some of the recent headwinds that we've seen with the high interest rate environment and supply chain challenges. Here in the U.S., just to put a little bit of perspective behind it, the Solar Energy Industry Association announced in May that we have surpassed 5 million panels installed nationwide. And it's interesting to think that it took us 40 years to get to that 1 million mark installed in 2016, and then only 8 to add an additional 4 million. The Solar Energy Industry Association has a very positive outlook going forward. We could double, those panels installed by 2030, triple it by 2035. So it just kind of shows, the speed at which we could continue to see strong growth here in the U.S. And looking globally, there's also, significant potential investments as well.
You said ETFs are a way to potentially capture the growth that we're seeing in the solar industry. How can we capture that for investors? Again, yes. Madeline.
Yeah, certainly. So we believe that investing in solar ETFs, including the Global X Solar ETF, could be one way for investors to capture the theme. While we're seeing the significant growth in the industry, the technology is still in the earlier stages of adoption. So, using an ETF to capture kind of the whole solar value chain from those manufacturing and those equipment providers, such as, solar panel providers, inverter providers, all the way through to the developers that are designing and developing those solar systems on the ground, could be one way to kind of remove some of the potential risks from just picking a few different companies.
I was looking at First Solar, for example, which had a nice run up, has come off the highs recently, but certainly the last 6 months have been looking pretty great. 6 months, it's up 58%, Jason. What names do you watch most closely, and which ones, in your opinion, are leaders for whatever reason?
So, great question. I still am extremely bullish on First Solar. I mean, even if you just watched it today, it traded up as high intraday as much as 3%. Putting about $8 a share. The reality is that First Solar, I think, is probably the pure play just because of the size and the balance sheet. And again, if you go back to where that growth is coming from, residential and commercial were down year over year and quarter over quarter. What was driving this was utility scale size projects. And interestingly enough, those were predominantly almost 50% of those in in Florida and in Texas. The residential side is what's being absolutely crushed now. There's huge headwinds in that space, not just because, as Madeline pointed out, the interest rate environment, but you're talking about the NEM 3.0 going into place, and what was the underwriting on the economics of putting on a solar panel in your house. It's a 75% reduction now in what you're able to charge back to the grid when you're producing more power than you use. So they're really skewing the economics in California, and I think they're shooting themselves in the foot on what I'll call the consumer side of the residential segment.
Mm-hmm. And for the ETFs, Madeline, which ones seem to be most popular in this group?
Yeah, I definitely agree with Jason that, we're seeing much stronger performances in the utility scale. As Jason mentioned, we've seen residential and the commercial segments impacted not only by the high interest rate environment, which has dampened demand not only here in the US, but in many of the other major markets around the world. But also, as Jason pointed out, that switch in net metering policy in California has put a bit of a slowdown in the residential market in California. So companies like First Solar, as well as some of those equipment providers, such as Next Tracker in terms of tracking, any of the companies that work in the utility scale segment, we're also seeing stronger performances.
All right, Madeline Ruid of Global X ETFs and Jason Britton of Reflection Asset Management. Jason, Madeline, thank you.